we're going to spend a bit of time reviewing what's changed, what government help is available now that we've had the big announcements over the weekends that we're all going to, as England, go into lockdown for a month. When we hear 2 weeks ago, we ran through a number of things. The job support scheme in particular, that's now not going to apply as we go into November. So let's share screen. Right. So there's 5 main areas that we're going to look at. So we're particularly looking at what's changed. The big one for us is going to be the much loved furlough scheme, the coronavirus job retention scheme. So what's changed and how that's going to start as at today, in fact. Looking at how the self-employed scheme has changed, increased as compared to what it spoke last week. The very confusing set of business cash grants that are available. A few changes to our 2 loan schemes, and also some subtle changes to how you can approach mortgage holidays. And at the end also, my colleague Ravi is going to give us some quick fire tactical tips that will be useful for us managing businesses, in particular, generating and keeping cash as we go into this really uncertain period. So jumping into our furlough scheme. So we all remember what's happened over the last nearly 6 months or so. The government's furlough scheme financed 80% of our employees' salaries with a cap of £2,500 on it. We required our employees to be fully furloughed, okay, in that period. So there was no working while you were off work. And the government previously paid then all of our employers' NIC and the pension costs that we had to contribute to our employee. We saw changes to that in the summer where it became more flexible. So we were able to take people in and out of furlough. When they were out of furlough, i.e. working, we had to pay them their normal salary, but we could then adapt to demand, put them back into furlough, and we would be able to access the scheme as we would normally. And then we've seen that sort of tiered down as we came up to the 31st of October, which is actually my birthday, on the weekend, and where it was due to finish. But instead of finishing, it's continuing as we now go into our second winter, or our first winter lockdown, our second lockdown as a country. Now, as we're going to lockdown, many businesses are being forced to close. So the scheme that the government came up with a few weeks back that Rishi spoke about, the job support scheme, was not going to quite cut it. There's going to be many people who can't actually work at all, rather than just do the part-time working. So what we know is that the furlough scheme, sort of as we know it, is going to be extended for the entire lockdown period, so up to 2nd December. Given that over the weekend there was some muttering from some of the politicians that there could be an extension to the current lockdown, we would expect the furlough scheme to follow that. So if we do go further into December with a lockdown, our expectation is it would continue. So in this furlough scheme, we're going back to the government paying 80% of the wage costs with the same cap, okay? But instead of the government covering our costs of paying our employees NI and the pension costs, we need to pay that. So the cost to us as employers is going to go up slightly, but the big sigh of relief is if I do need to close my pub, my retail unit, my child's soft play centre, any of these sort of places, you can put your entire staff onto furlough and they can go down to their 80% furlough salary and you'll be pretty much covered for most of your costs, okay? Much like the second round of our previous furlough scheme, it will be flexible. So you can adapt to demand if you are a business that can remain open but will experience reduced demand. So you can take them on and off. It could be a few days here, it could be a week here and a week on. You're able to do that. And remember that once this comes to an end in 2nd December, we do switch then to the less generous job support scheme. Now, when we do get towards the end of this month and the end of this lockdown period, we'll run another session to look at that job support scheme, because since we spoke about it 2 weeks ago, it's become even more confusing, and so it's changed quite a bit, and undoubtedly will change throughout this period. There is now an open job support scheme and a closed job support scheme, depending on whether you can remain open or closed as a business. And so one is quite generous, one is not very generous. So let's just check again who can access this furlough scheme. So it will still be all UK businesses. Okay, it is going to be continue to be administered via PAYE, and the cut-off date, there is, as each time we've had an extended furlough scheme and we've had a cut-off date, this particular scheme will only be available for employees who were already on your payroll and an RTI as it was filed by 30th of October. So that means if you hired someone through the middle of October and they did not work for your organization previously, they weren't on PAYE, and you only filed your RTI after that date, they won't count for this scheme. Okay, as we saw in the last rounds of this, that was a particular black and white decision or black and white rule. It's either you're within the payroll system before the cutoff date or you're without. Okay. Just as the last scheme as well, so this furlough scheme will apply to either full-time and part-time workers. If you're a part-time worker or a worker indeed with irregular hours, the way that we assess or what is your pay, you can either look at the same point last year, so November last year, or look at the average over the last 12 months, and whichever is higher, you can use that to calculate your 80% of wage to cover, still with the £2,500 cap. Okay. Now, really important, if you manage to get through the last set of, or the summer up until now without needing to furlough your workforce, that doesn't matter. So you neither needed to qualify or be part of the scheme at that point. Your employees still need to be in the business by that cutoff date, but you didn't need to make claims under the old scheme to make claims under this scheme. Okay, I think most of our client base who have been using it have been working with us to file their PAYE claims of this. I think we'll maybe look at that in a few moments. But if you haven't, and this is the first time you're running the scheme, talk to your client manager, partner, and we can describe how we can help you make those claims via the HMRC portal. It's not super straightforward to do that. Okay. I think worth clarifying as well, because we had many questions of this throughout the last furlough period, is what does furlough actually mean? It's, in this blunter sense, it is not working. Okay, so you can't assign your employee to do some work for you, manage your social media or something as well at home. They can't work. There were some exceptions that did appear in the rule, in the wording of the rules around training. The government still wants to encourage people to do training at home, and no doubt that will continue into this scheme. And lastly, when you do have your employee work for you, so if you're taking advantage of the flexible nature of the scheme, so having some people on one week and off the other week, for the hours that they do work for you, you must pay them. Okay, so that is not covered by the government scheme, and that would be on their usual earnings basis. Okay. Just as mentioned a few moments ago, it is continued to be through the PAYE scheme. We can help you do that, or if you run your own payroll, your payroll software might even now be able to do that. So a lot of the big payroll software providers are catching up and sending their updates out to have a furlough module within their software, so you can sometimes do it through that. Since the scheme opens back in the summer, we can report that the claims are paid really quickly, and they do honor that 6-day period. It's a pretty slick process now. Okay. Right, so moving on out of employment to the mirrored scheme within the self-employed space. So remember, we've had 2 rounds so far of this scheme, paying between 70 to 80% of your normal profit. So looking very similar to our furlough scheme, with the same cap of £2,500. Okay, so it was looking at over the periods of assessment for each of the 2 rounds so far. You are averaging your earnings each month, and then capping it at £2,500, and that was paid out always in one lump sum at the end of each of those periods in April and September. Okay, and as we spoke about a few weeks ago, the intention has always been to continue this scheme, okay, running from November all the way through to the end of January next year. The original intention was to start phasing this out, I think, more heavily, so bringing down to 40% of your profits, okay, with a reduced cap on it as you came down through that as well. So the update is, well, we're still going to run the scheme, but it's going to be more generous. Okay, as we're going to see more and more self-employed people unable to actually do their job. So take a hairdresser, which is a common self-employed space, they're not going to be able to do their job properly over or at all over the next month. So for the November portion of the November to January period, the scheme will allow an 80% payout, capped still at the £2.5 grand. Okay, the others are still intended to be at 40%. Perhaps if we have the lockdown period extended, that will change. So when you look at that as a whole over that whole period, November to January, the average, so 80% November, 40% in December and January, the average will be a 55% of trading profits payout. And the reason why that's average is important is that unlike the furlough scheme, which pays out to the employer every month, this will be at from what we understand at the moment, it will be at the end of the period. We're learning new things every day as new announcements and things are updated every day, but it will more than likely mirror the other schemes where it will pay out at the end of the period. So you're looking at an average over that whole period. Now, just in terms of the moving on from that, in terms of there's still the government notices do say there will be a fourth cash grant afterwards. There's no details on that yet. A lot of that, again, I think will depend on whether we continue lockdown further into winter as we get through to spring. It's worth, before we move on, it's worth us just checking the eligibility criteria, as we get a lot of questions around this. First thing is, remember what self-employed means. For self-employed, you can be a sole trader, and you can be member of a partnership, which includes limited liability partners. Okay, so you're, from a tax perspective, classed as self-employed. Okay, the key one of the key parts to the criteria is a self-assessed position that you've had lost trading profits during the period. And there's some notes in our deck which we'll send out to everyone around what that loss could be, but it can be anything from you being unable to do your job because you're told you can't, or your supply chain has broken, or your demand has diminished. Okay, but you just have to be impacted during that period. It probably won't apply to most people now, but you would have had to have filed a tax return for the last year. If you're not a self-employed person in that period, you won't be in this scheme. So the government needs to have you registered within their tax data as a self-employed individual to be able to apply and be paid out under the scheme. And if we remember as well, this scheme wasn't for those who received larger profits, and the cutoff was £50,000. So if you had £50,001 of annual trading profits, it wouldn't you wouldn't be able to apply for this scheme. Okay, so only for the smaller end. Actually, above that point, there isn't really any support for you. Fall into the same category, similar then as director owners of limited companies. Okay. One key point here actually is the within the rules, we've seen this point of you have to have been eligible but not have claimed for your other SEISS grants. Okay, so you must have met these criteria but not necessarily drawn down to apply before. Okay, so you would have had to ultimately be able to show that you've had to been impacted by COVID over this whole period in order to be able to claim under this. Unlike the furlough scheme, we can't make the application on your behalf, and HMRC have been very particular ensuring that tax agents like ourselves do not do that. Okay, there was a portal you could go to, and this link would take you there to go and just put in, I think it was just your NI number to check whether you qualify and to start the process. That portal, I don't think exists at the moment because the previous rounds have closed. But if you do follow this link when we send out the slides, you'll go through to the main information area. But also just try Googling it and you'll get through down to the government pages where you can, when the portal is open, you'll be able to access the eligibility tester. Now, we're just throwing it in here because we continue throughout this whole coronavirus pandemic period, we keep getting the same question from this one small, from a more or less a forgotten group or a marginalized group of business people, which is the owner manager of a limited company that's quite small. So isn't necessarily a scale business of lots of employees, but for whatever reason, the individual has decided to structure their business as a limited company. So if you are a director of a limited company and you're that owner of a limited company and you receive your remuneration, so you take your money out of your limited company via a small payroll and mostly a dividend, you pretty much don't qualify for anything. Okay, because remember, dividends are not counted as self-employed income. That is earned investment income from your shareholding in your limited company. Okay, so most of the time when we're talking to those of you who are in the situation, it's pointing you towards the various different loan schemes, in particular the bounce back loan scheme, in order to be able to create to fund your gaps and your fall in demand at this period. Okay. So the business cash grants. Okay, so moving on from employment and self-employment based mechanisms to handing out cash by our local councils. So we did see, particularly in the first opening gambit of the pandemic, lots of cash was handed out by local councils, and this will continue as we go into our more stringent lockdown. There's two categories here, and these are all quite confusing, and new information seems to be coming out each day to clarify these. But if we break it into two categories, so those of you who are impacted by a local lockdown, so that's mostly up north, and now everyone, as at the end of the week, national lockdown, and have been legally required to close, i.e. you cannot open your doors for whatever reason, so child soft play, hairdresser, that sort of thing. There is a grant available that at the moment appears to will be automated by the local authority. That will be based upon your rateable value. Okay, paid out fortnightly and based on 3 different levels. So below 15 grand, above 15 grand, below 51, and then above £51,000 as rateable value. Okay. Now, what became very clear is that, okay, there's those that are legally required to close. Great, here's some money. But what about those that get stuck in the middle? So we're talking mostly around restaurants and pubs where you could stay in the game by offering a takeaway or some form of delivery service, but for the most part, your business cannot operate. Or indeed those people in really any retail situation that haven't have been in maybe a tier 2 situation where, okay, you haven't had to close, but there's not really a lot of people around, and so you've had a dramatic reduce in demand. So there is those available for reduction in demand. So it's a slightly reduced at 70% of what could be paid out under the full lockdown grants, again assessed under rateable value. Now, there's a few things with this reduction in demand section. So one, there's going to be some backdating of it, as this is new information, particularly for tier 2 areas. So some of you, particularly in the London area, where we've been in tier 2 since the 15th of October, there may be some backdated amounts available for you going back from 15 October to today. Okay, and then going forward, you'll be able to access as well. But the grey area here is that effectively the local authorities have been given full control of this grant, and the wording shows full control over what actually is distributed. So the rules don't seem to be set in stone. So it would be read at the moment, from what we know, is that if you're a shop with a rateable value of over 51,000, I'd read it as you could get up to 2,100 a month. Okay, it does appear that the local authorities may be given the ability to assess your business and decide how open can you be. So if you are a restaurant which only does takeaway and you'll continue to take away and flourishing more than ever before, perhaps the local authority is going to have the power then to say, well, actually, that's not going to be available to you. The basis of assessment, unknown. The process of assessment, unknown. Who exactly will have the authority to do it within the local councils, currently unknown. So we'd hope to learn a lot over the next few days exactly how that's going to work. Because I know there's a good number on the call who do run retail type locations, pubs, cafes, etc. Well, this will be very, very important for you in your calculation whether you should indeed close entirely or continue to do some form of takeaway service. Right, Dan, what do we know about CBILS and our BBL loan scheme?
Yeah, not a problem. Cool. So just firstly to recap what the CBILS and the bounce back loan schemes actually are. They were schemes initially launched in March by the government to support businesses who were suffering as a result of the pandemic, and indeed just to get money out in the economy. And essentially what they said at that point in time is that they would underwrite banks or high street lenders, either 80% in the case of the CBILS or 100% in the case of the bounce back, loans to small businesses. Now, these loans, both for CBILS and bounce back, are capped at 25% of your turnover. The more favourable bounce back for loans between 0 and 50k was a capped interest rate, I think, of 2.1%. The CBILS for larger loans and for larger refinances was the interest rate is set by the lender or by the individual funding provider. And what we've seen over the last sort of week or two is a couple of changes to the CBILS, and most prominently an extension. So it was due to end at 31st of October, and the government have now extended that to the end of January 2021. And the second sort of key excerpt we've seen this week is about specifically the bounce back loans, because obviously the threshold is at 25% of your turnover as the maximum amount that you can borrow. They've changed the legislation slightly such that if you took a loan less than 25% of your turnover under the bounce back scheme, you can now go back to the lender and get a top up or get a second funding piece to take you up to that 25% threshold. So they're the two key things we've seen in line with the national lockdown being introduced this week. But prior to that, we also saw a couple of other things change. So recently we saw both for CBILS and the bounce back loan, the maximum loan term increased from 6 years to 10 years. Now that's an interesting one because in particular, we saw that whilst that's increased, some of the lenders that we work with, their fund length is actually beyond 6 years, and they're not necessarily willing to offer loans above that 6-year cap, despite being allowed to under government legislation. And the second sort of key thing we saw change a couple of weeks ago is this pay-as-you-grow idea or flexibility in terms of paying back your bounce back loan. So what that meant was that you had the options that are listed there on screen to either move to an interest-only payment or to pause repayments entirely. And I believe the repayment holiday at the bottom you can only do once, and the interest-only payment holiday you can do, I think, 3 times. So they're the key things, I think, with the CBILS and bounce back loan schemes.
So it's something that I've reiterated every time we've spoken about these loan schemes, is that if you haven't already got a BBL loan, I'd strongly advise you to pursue one and to do that sooner rather than later, because the banks aren't the biggest fans of them because they can't really see a way they make a lot of money out of doing it. They can't charge fees on the in and out, and the interest rate is lower than you would ever normally be offered. But remember as well, because these BBL loans are interest free and capital repayment free for 1 year, you can effectively treat it like an overdraft for that period. Okay, so we've got lots of uncertainty going into the spring and over into the summer, where we hopefully start seeing widespread vaccination schemes happening. You can have it in place for that period just in case. And if you don't need it, you can pay it back, and there's no real financial impact on the business at all. So if you haven't got one already, I encourage you to go in and pursue that.
Yeah, just to add to that, John, quickly, you're right that they are also payment free. So as in, if you were to take the loan out as an overdraft, you don't pay any early repayment fees whatsoever in paying it back at a later date. So
no, that's throughout the whole period of the loan as well. So you could hold on to it for a bit longer if you need to. There's no early payment penalties or charges at all.
Yeah.
So John, just very quickly that we are seeing some of the challenger banks being a lot more aggressive around their CBIL loans. So I would strongly recommend that you consider either the CBILS as part of refinancing your current loans and getting a bit of a top up as as one of your cash management strategies, or looking at a CBILS loan to get rid of your PG. And what Dan and I were finding up to the recent announcement was that there was a big push to get these through, and we are expecting that level of activity to continue from the lender's end. So if you were thinking about it, now's the time to really press the button.
Yeah, so you mentioned something very important there, is that a lot of banks now, it's clearer what they're allowed to do in terms of refinancing loans you've currently got into CBILS loans. So the government have put restrictions on the amount of their CBILS loan portfolio which can be made up of these refinancings, but they are allowed to do them. But the key thing that Rory pointed out there is that if you have an outstanding loan that has a personal guarantee on, and you refinance it into a CBILS loan, that personal guarantee may fall away entirely or in part, depending on the size of the CBILS loan you get, which is a strong risk strategy or de-risking strategy to pursue at the moment. So Dan, mortgage holidays.
Yep, moving on quickly to mortgage holidays. So another scheme that was set up early in March was this idea that for UK homeowners who are struggling as a result of the pandemic or in financial difficulty of any sort, they had this option to go to their lenders and request this 3-month mortgage holiday, basically. So where they didn't make any mortgage repayments across that 3-month period. Interest still accrued over that period, but the main mortgage repayment that they would make for those months, they could request a 3-month holiday. And just to be clear, what we're talking about here, that's both with residential and buy-to-let mortgages. So they were specifically mentioned by Rishi and by the UK government that they were able to apply for these 3-month payment holidays. And again, as with many of the other schemes, they were initially due to close on 31st October. So 31st October would be the last date that you would have been able to request this and therefore have it for future periods. But in line with the second national lockdown and other schemes being extended, they've also extended this scheme. And what they've done is they've extended it in 2 different ways. So first is by saying, that the maximum repayment holiday that anybody can request is no longer 3 months, it's 6 months. So if you previously had a repayment holiday of 3 months, you can either completed or still ongoing, you can go back to your lender and actually request for that to be extended to 6 months. Or if you hadn't requested a payment holiday at all, you can also go to them and request a 6-month repayment holiday. And the deadline for those applications has now been extended to the 31st of January. So another big sort of shift there in pushing things into early next year. The FCA only published its sort of guidance on this on Monday, and the main banks and lenders are yet to properly respond to this. So we're expecting more detailed guidance on these to follow over the next week or so.
Great, thanks, Dan. Okay, so we've learned a bit about what's available to help us, but mostly really it's down to us to help ourselves and manage our businesses in new ways as we're going into a high risk, high uncertainty period. So it'd be, Ravi, if you could just run through some of the top 5 type tactics that you're talking about with our clients where we're advising them on cash management and bits like that.
Sure. So over the last couple of days since the announcements over the weekend, we've been working quite hard with a lot of you to understand, what are our options over the next 4 weeks, and they effectively build on some of the foundational stuff we discussed earlier on in the year. So, I implore all of you, get your cash flow forecast updated quickly. Speak to your customers, understand during the next 4 weeks, are you expecting to take delivery of our goods on time, or are things changing? I think what we've definitely found over the last few days is some of our manufacturing businesses have definitely been surprised in that some of their customers are still expecting delivery of goods, which has a positive impact on the cash flow. So get your cash flow forecast updated. Now, some of you might have your own, some of you might be using the template we provided earlier, but let's get that done first. As John talked about earlier, although it's slightly complex, be clear about what government grants are going to be available to you and start putting that in your forecast. Understand, even if you are underestimating the amounts, let's get it in there somewhere so you can understand what your profile looks like. speak to your customers. If you feel like cash is going to be tight, you can make some deals with them to get them to pay slightly sooner. And then what those three things allow you to do is get a picture of how the money's coming in. Now, if you're finding that the money coming in is starting to dry up, and actually the level of activity over the next four plus week period is starting to slow, don't worry too much, because you can start to look at your staff level, your operating level, to see, hold on, does it match the level of activity I'm expecting, or is there a bit of a mismatch, and so shall I use the furlough scheme to better balance out my business? As we've always talked about from the beginning, I would communicate openly, widely, and quickly with your suppliers. Everyone's going through the same thing at the moment together, so everyone's being a lot more flexible in terms of payment plans and delay payments. So once you've got your cash flow clear, once you know how you're going to use the furlough scheme, if at all, then you can start making some plans with your suppliers. And then the key thing we've then talked about with a lot of our clients, and a lot of you out there already doing, is the one thing that the pandemic has brought about is everyone's starting to think outside the box a bit. So, with your retailers out there, are you offering click and collect? Is there a way you can do that? So I know that's something car dealers and motorhome dealers are really thinking a lot about at the moment, of how do we set ourselves up to do click and collect, and for customers to look at vehicles online. With your cafes and your restaurants, we know firsthand of a few who had quite a successful period during the takeaway and delivery element of the pandemic, and actually gearing yourself back up for that come Thursday is something to really look out for. So really continuing to think outside the box, which a lot of you probably started to do earlier on in the year.
That's great. I can't reiterate enough as well that the first point Trevor's got here is updating your cash flow is probably one of the most important and overlooked sort of strategies to do going into a period of uncertainty. Often there's a tendency just to, right, let's go out, let's go and collect cash, let's just go and do things. But by actually spending a bit of time mapping out what you think is going to happen with your business, one, you can discover often things are going to happen not quite like you think they are, and you uncover strategies which you never thought of before. Be that, well, actually, if I delay this one payment by 1 week and this one by this, brought this receipt forward by 2 days, actually everything works fine. And certainly from a peace of mind, a sleep at night type strategy, number one is the best thing you can do. And actually what we can do is when we distribute this pack, this deck to everyone on the call, we'll put back on our cash flow template that we've distributed before, and we'll also put a link to a video where we've talked through before running that. We've run a webinar in the past where we've talked through how we actually run a cash flow forecast, particularly using a tool similar to what we can distribute to all of you. Okay. All right, so that brings us to the end of towards the end of our session today. Rosie, should we crack on with some Q&A?
Yes, so we've got a couple of relevant questions that were submitted in the webinar today, so I'll just go for those first. There was a question, thank you for your question, Mark Breen, saying that he's been turned away for BBL loans from his saying that the bank, his own bank, has stopped, which is called Tide, has stopped accepting new applications. Then they approached other banks and they were only giving BBL loans to existing account holders. So what's the advice there?
This is not the first. Hi, Mark. This is not the first time we've heard this. We've seen a lot of struggles from individuals actually, and unfortunately, the commonality has been people using some of the new on the block banks, Tide, Starling Bank, I think might be one of them, and effectively the app only type banks which didn't really have the infrastructure to roll up BBL at any high volume or even at all. So individuals banking with those lenders have had to go to the more traditional high street banks, and until recently, I think their doors might be closed as well. HSBC were the only bank with their doors open to non-banking customers already. I don't know if that's changed recently with
No, it's still the same, but what we are experiencing is there is the delay with HSBC is increasing. So quite whereas before at the beginning you're finding HSBC were paying out quite quickly, that started to slow slightly.
We've heard stories of sort of 8 weeks plus, even,
right.
You know, and the saga continuing. So I think that the advice, Mark, is make sure you've got the complete full list of banks that can offer it. Run a process with the entire list to make sure that nothing has been missed off. Now, I'm sure you've already done that to some extent, but also I think probably watch this space a bit as well, because that there seems to be a story that's growing where this loan scheme, which was a really good tool for RISI to come out with, hasn't quite got everywhere where it should do. And now we're going into another period of uncertainty, and we've seen the BBL scheme extended. There might be a refreshed push by the government onto the banks to do this. But unfortunately, from the banker's perspective, there's not a lot of incentive to do it because interest rates are low. There's no fees really involved with it.
Okay, and we had a question from Mike Carolan, who's saying, for the November furlough calculation, if an employee had a salary increase in April 2020, should he be using an average of the last 12 months' wage or 1/12 of the new annual salary?
Good technical question. I think the answer is the current salary you're on. But if we're running your payroll, ask that question, that specific question to the team, and they can just check the rules precisely. Or your client manager looking after it. But it's the wording of the main headline rules is it is the individual salary at that point in time. It's only when there's a variable salary, so where it's very clear you have to go back over the 12 months. If you're a part-time worker, shift worker, that sort of thing, then you look back at these averages. I think you'll be pretty safe looking at the increased wage, but check that with the payroll team.
Okay. And we have a question from Julian Wood, who's saying, as a company director, he was claiming CJRS until the end of July, then went off it. How would he claim for the new lockdown?
So presumably this is you as a director and as you as an employee to the business, so you're receiving a PAYE salary from the business. Now, as long as you were on a PAYE filing before 30th of October, that's fine. It's only for that cutoff date is for people who were, well, the people really impact is where you've hired new people over October. You've ended up paying them for October, but the RTA filing date has been after 30th. But as long as you've had some payroll process prior to that date, you're fine. Remember that you didn't have had to use the previous schemes at all. So if you've made a claim after the previous scheme, then I think you've already proven that you qualify for it. So you should qualify again.
Okay, and one of the pre-submitted questions from Anne Clare and from AV Consulting was asking, is there any support for the self-employed who are in between contracts?
It's a good question. Dan, do you want to pick this one up?
Sure. So the self-employed grant is again a test against your previous earnings, not anything to do with your specific contracts at this point in time, against your previous earning level. So if you are unable to earn for any reason, whether it be a contract hasn't come through or has fallen through for whatever reason, it's based upon last year's annual trading earnings or annual earnings last year. So that's how the grant is calculated, not necessarily anything to do with the income that's expected this year.
So you almost certainly can still get your hand on the cash. You do to make sure that when we looked at that qualification criteria, the greyest area is this: have I been impacted? Has my trading been reduced? Has it been impacted by COVID-19? So you need to be able to stand by that. But that's on your position to do. And to be honest, most people's trading have been impacted in some form by COVID-19, unless you're a consultant helping Amazon continue to grow, and then you probably haven't been.
And another pre-submitted question from Anne Marie is asking, how do you calculate 80% of irregular hours?
So the rule is, so you can look at the average of the past 12 months or the same point in the same month last year, and whichever is highest, you can use that. But it's still the 80% of, and the cap of £2,500.
Mm-hmm. We've covered this question to some extent, but just to clarify for Eleanor from who's asking, what is the government support for businesses which are able to stay open, but as you say, probably affected in some way?
Dan, do you want to pick this up?
Yeah, again, I think the biggest schemes that you'd be able to qualify for, if you've suffered some form of reduced demand, as John ran through earlier with the business grants, then it's likely you'll be able to claim some of the cash grants based upon your property's rateable value. If not, then unfortunately, from a cash grant perspective, that's probably it. But as John also mentioned earlier, the bounce back loan schemes and the CBILS loan schemes in particular are worth investigating.
So it's these reduction in demand amounts, but the really odd thing about this grant is this ability for the local authority to be the arbiter of it. And from the way I see it, that's never a good thing. One, not necessarily because they'll make the wrong decisions, but the process, if they have to actually take a view on who gets them, is a process which will lead to delay. And perhaps what local councils will just end up doing is just saying, well, if you apply for it, you get it, and then we might check afterwards. But we'll see. Okay, and we had a question from Samir, who was asking for the link to apply for the self-employed grant. Is that in the slide deck that we'll be sharing? So there's a link in the qualification criteria area, which did link through to the portal to put your NI number in to take your qualification, but that portal doesn't actually exist now. And actually that link just takes you back to a page which says, these are all the rules. And basically that's the page you need to watch to see when you can, it will load up again and apply again. But as your kind of accountants or tax advisors, we can't actually make that application on your behalf. So I think keep checking back to the government websites and just keep Googling it, and you'll find the portal. I'm sure it will open up soon. So Dan, we've got some dates. Just to add on to that, the date that it's supposed to open is the 30th of November. It was initially the middle of December, but they brought it forward to the 30th of November is the date that they're stating. But remember, that's unlikely to bring forward the date when you're actually paid. As from the previous schemes, we've seen them paid out at the end of the scheme, though it might change. Okay, great. And then the last two questions we had are quite technical, from Peter Lambert and Melanie Jin. So I'll share those with the client managers, and we'll get back to you on those technical questions. Super. Okay, that's all the questions for. Oh, sorry, we've got one more just submitted. It's from Paul Etty saying, hi, Paul. Does the new furlough scheme start tomorrow? What happens between the days of the 31st of October and tomorrow? Actually, I'll take that one if you don't mind. It's live from the 1st of November. So the idea is that there was no gap in support from the last one ending. They said in the announcement on the 31st that they'd make sure that didn't happen. So 80% applies to these few days in the gap there between 31st of October and national lockdown actually coming into place. Okay, excellent. Well, that's a useful question. And remember, Paul, that if we do extend our lockdown period, it's likely just to continue rolling on as well. Excellent. Okay, well, I think that's a good question to end on. So we'll get back to on your technical questions if those were submitted, and the slides and the recording will be sent around this afternoon, and you're welcome to share that with other contacts and colleagues that might find the information useful as well. I'm just going to launch a poll now to get your feedback on today and see if you're interested in any other Acuity services that we offer. So if you take a moment to answer that, please. And then, John, will we be doing another webinar? I'm pretty sure we will do. I mean, we're in a rapidly changing environment at the moment, and particularly the cash grants. There's just not enough information around them at the moment to really know how to access them. So we'll keep everyone posted, and every time there's enough information that's worthwhile getting you all together, and we know enough about it, we'll do that. So I suspect within the next 2 weeks, there'll be another session. Okay, excellent. Well, thank you very much, everybody, and we look forward to welcoming you on to another webinar soon. Excellent. Thank you. Goodbye, everyone. Thanks all.